the date of today is an important date. And the reason that's important is just yesterday at Davos, Switzerland, the IMF stood up and said, the world economy is hitting into the worst economic headwinds since World War II. The worst. And when the crash comes, it comes so fast on you, you don't know what's going to hit. I look at the emptying office spaces because people are not going back to work. I mean, this is not an ordinary recession. You know, Apple says they're not going to go back to work. You know, all the office buildings empty. And, you know, residential real estate depends upon jobs. You know what I mean? If you're saying recession means a loss of jobs, which Amazon's laying off, what happens to real estate wherever they have an Amazon office? That was one of the biggest announcements I ever heard, that the IMF is saying the world faces one of the biggest economic challenges since World War II. I just got one big question, okay? Que pasa? What does it mean when at, you know, the Davos, Switzerland, the IMF says we're heading into the worst financial headwinds since World War II? What does that mean for the world, Ralph?
So why World War II? World War II was a fascinating period because the entire world had basically been stuck at home or been on, you know, on battlefields. Everyone came back. There was no supply of commodities and goods. Global supply chains were broken, and everybody came back and started consuming again. And guess what? Inflation went up to 13% or something, maybe even higher. And that period was fascinating because interest rates went up, and the first thing that happened was the economy went straight back into recession, and rates and inflation went negative because it was a massive tightening of monetary conditions. You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times. And I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of this oil crisis of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled and interest rates went up. Inflation shot up. And the immediate effect was the economy went down the toilet. Almost do not pass go. The stock market fell 50%. And the ISM survey, which is a good guide to the business cycle, it's the Institute of Supply Managers survey. Anytime it crosses below 50, suggests the economy is getting weak. A recession comes at about 47. It hit 30, which was the lowest in all history. And it happened in a space of 4 months. It went from roughly where it is today, which is around 55, and went to the lowest level in 4 months, based on exactly the same kind of setup we've got now.
So are you saying that the 70s and now are pretty close?
Yes, and inflation fell in 1974 afterwards. People are still thinking inflation goes on forever. It did not, and it did not in the 1940s either. Then the next one up is 1984. 1984, we saw an issue where global trade, there was a huge amount of trade disputes. The dollar was pretty strong, like it is now. Interest rates were going up, and inflation was high. And everybody was fearing, looking back and saying, oh, we don't want the early 80s, late 70s again, the inflation. So Volcker was tightening rates too much, and the economy collapsed. It didn't go to recession because the Fed quickly started cutting rates, but the dollar went up a lot more and created a lot more problems. We ended up with the Plaza Accord in 1985 when everybody had to stop the dollar going up from destroying the global economy.
Right.
So then the next time we see something similar was 2008. 2008, if you remember, the oil price was at $147. Inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high, the Fed were hiking rates, trying to tighten the balance sheet, and what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you've borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer. So you can't consume as much and you start not consuming other things. People overextended on housing because they rushed into housing in 2020 and 2021, and the rates have gone up for them. Also, just the rise in things like the cost of oil has meant that, you know, gas prices, all of this stuff, and then the rise in the dollar, which is a monetary tightening. All of these things get together would suggest, and I put them on a chart, it suggests that the ISM is going back to 30, which is as it was in 1974, which is a terrifying fall. Now, the economy has just broken, and the Fed are going to have to pivot. A loss of jobs and a loss in your net worth, because it's the falling of asset prices that comes with a recession. And people always think it's going to be inflation is what it leads to. It leads to something much more pernicious and evil, which is the debasement of currency. And what that does, how it manifests itself, is all of these scarce assets, equities, real estate, gold, crypto, go up a lot. But all they're doing is reflecting the devaluation of the fiat currency itself. So that optically can change everything, because suddenly all of these things go up, everybody feels okay, and it changes the outcome. People are still worse off, generally, but it's a trick. And so I think that trick gets played again pretty soon. Regardless of what our political or economic views are, this is what is going to happen. So we have to judge it with that lens, not how we would like it to be, but what it will be.
Okay.
And what the probabilities are.